Bitcoin has just experienced a shocking 5.7% sell-off, plummeting to $64,400. This dramatic decline follows hawkish signals from the Bank of Japan and renewed ETF outflows. Let's dive into the details behind this significant event. Looking ahead, Bitcoin's short-term trajectory remains uncertain as it grapples with market volatility. Recently, the cryptocurrency struggled to maintain its value, hovering around the $61,000 mark. If it fails to reclaim the $64,400 level soon, analysts warn it may test $60,000, a critical psychological and technical support level that could trigger further sell-offs. Investors should remain vigilant, particularly regarding external catalysts such as escalating U.S.-Iran tensions, which threaten to impact global oil prices and subsequently dampen risk appetite across financial markets. These geopolitical factors can create a ripple effect that influences investor sentiment towards volatile assets like Bitcoin. Furthermore, shifts in ETF flow data will be pivotal in gauging institutional interest in cryptocurrencies. A decline in inflows could signal waning confidence among institutional investors, while an increase may bolster Bitcoin's standing as a legitimate asset class. Experts predict that while short-term volatility is likely, Bitcoin's long-term value proposition may still hold firm, particularly if macroeconomic conditions stabilize. The cryptocurrency has demonstrated resilience in the face of past crises, often bouncing back stronger as traditional markets falter. However, the ongoing debate surrounding Bitcoin's future raises critical questions. Can Bitcoin hold its ground against the pressures of global economic shifts, or will it succumb to the weight of regulatory scrutiny and changing investor preferences? As the market navigates these turbulent waters, the path forward for Bitcoin will depend on a confluence of factors, including regulatory developments and macroeconomic stability. Investors will be keenly observing these dynamics, as they hold the key to understanding whether Bitcoin can emerge from this phase stronger and more integrated into the global financial system. The coming weeks will be crucial in shaping the narrative around Bitcoin's resilience. The recent Bitcoin sell-off can be attributed to a mix of macroeconomic factors and shifting market sentiment. Bitcoin, which had been riding high and briefly exceeded $63,000, saw its gains evaporate amid a backdrop of changing financial conditions. The decline began after the Bank of Japan adopted an unexpected hawkish stance, signaling a potential tightening of monetary policy. This shift rattled investor confidence, prompting many to reassess their positions in the cryptocurrency market. Compounding this situation were ongoing outflows from exchange-traded funds, ETFs, linked to Bitcoin, which have put additional downward pressure on prices and hindered any potential breakout. Historically, significant sell-offs in Bitcoin often coincide with regulatory uncertainties and evolving macroeconomic landscapes. The current environment reflects a broader trend where institutional investors, pivotal players in the cryptocurrency space, are increasingly cautious. Their selling behavior can significantly influence Bitcoin's price trajectory, especially during periods of volatility. Additionally, the ongoing boom in artificial intelligence has drawn substantial capital away from cryptocurrencies, further complicating the investment landscape for Bitcoin. The impact of this sell-off extends beyond immediate price fluctuations. It raises important questions about the sustainability of Bitcoin's recent rally and the overall health of the cryptocurrency market. Investor sentiment is fragile, and the recent downturn may lead to increased skepticism about Bitcoin's long-term viability as a store of value. Looking ahead, the market faces a critical juncture where regulatory clarity and macroeconomic stability will be essential. As central banks around the world navigate inflationary pressures, Bitcoin's ability to regain momentum will depend on how effectively it can adapt to these changing conditions. The upcoming months will be crucial as investors keep a close eye on pivotal economic indicators and regulatory developments that could shape Bitcoin's future trajectory. The recent sell-off in Bitcoin has sent shockwaves through the cryptocurrency market, raising immediate concerns for investors. The digital currency dropped below the critical threshold of $64,400, prompting fears of a further decline towards lower support levels. This downturn threatens to erase the substantial gains seen since June 15th, when Bitcoin reached its peak of $67,250. Investors are now questioning the sustainability of such highs and the overall health of the market. The ongoing outflows from Bitcoin exchange-traded funds, ETFs, further indicate a bearish trend, showcasing a growing lack of confidence, particularly among institutional investors who have historically driven much of the market's momentum. To understand the current situation, it's essential to consider the broader context of Bitcoin's performance and its relationship with global monetary policies. The cryptocurrency has shown notable sensitivity to shifts in economic conditions, particularly those influenced by major economies like Japan, where central bank policies can have far-reaching effects. Recent adjustments in interest rates and monetary easing strategies have created a ripple effect, impacting investor sentiment across various asset classes, including cryptocurrencies. As regulatory scrutiny increases and the macroeconomic landscape becomes more complex, Bitcoin's volatility is likely to persist. The implications of this sell-off extend beyond immediate losses for individual investors. A sustained downturn could lead to a broader market correction, affecting related industries and technologies. For many retail investors, this volatility underscores the critical need for a deeper understanding of macroeconomic influences and risk management strategies when engaging with cryptocurrencies. As Bitcoin continues to react to external pressures, the market's response could significantly impact investor portfolios, highlighting the interconnectedness of global finance. Looking ahead, the outlook for Bitcoin remains uncertain as it navigates these turbulent waters. Investors will need to closely monitor macroeconomic indicators and central bank decisions that could influence market sentiment. Additionally, the resilience of Bitcoin and its ability to recover from this sell-off will be tested in the coming weeks. The cryptocurrency's future trajectory will hinge on how it responds to these economic signals, making it imperative for investors to remain vigilant and informed about the evolving landscape. On July 11, 2026, Bitcoin faced a sharp decline of 5.7%, dropping to $64,400. This sell-off was largely attributed to hawkish comments from the Bank of Japan, which have historically influenced global risk appetite. Earlier in the day, Bitcoin attempted to breach the $64,400 resistance level, but failed, leading to further losses as traders reacted to the shifting sentiment. The CoinDesk 20 index mirrored this trend, indicating a broader market reaction that extended beyond Bitcoin alone. This drop occurred amid sustained ETF outflows as institutional investors continued to liquidate their holdings, raising alarms about the asset's stability. The current market dynamics reflect a growing concern over Bitcoin's ability to maintain its value amid changing macroeconomic conditions. The Bank of Japan's recent statements signaled a potential tightening of monetary policy, which typically dampens enthusiasm for riskier assets like cryptocurrencies. Unlike previous sell-offs, this particular decline is notable due to its timing, with significant global monetary policy shifts hinting at the fragility of current market sentiment. Many traders are becoming increasingly cautious, fearing that rising interest rates and inflationary pressures could further undermine Bitcoin's appeal as a hedge against economic instability. The impact of this decline is profound, signaling a potential shift in investor confidence. As institutional investors retreat, retail investors may also become hesitant, fearing further losses. This could lead to a self-reinforcing cycle of sell-offs, exacerbating price declines and further eroding market trust. Additionally, the broader cryptocurrency market seems to be reacting negatively, reflecting fears that the regulatory landscape and macroeconomic conditions could continue to challenge digital assets. Looking ahead, the outlook for Bitcoin remains uncertain. Analysts suggest that the cryptocurrency must stabilize above key support levels to regain investor confidence. If the Bank of Japan and other central banks continue to adopt a hawkish stance, Bitcoin may struggle to attract the inflows needed for recovery. However, if macroeconomic conditions stabilize and institutional interest in Bitcoin resurfaces, the digital asset could experience renewed momentum. Market participants will be particularly focused on upcoming economic indicators and central bank meetings to gauge the future trajectory of Bitcoin. As we analyze Bitcoin's future, the critical question remains: can it maintain its support around $60,000 in the face of ongoing challenges? Share your thoughts in the comments below, and don't forget to subscribe for daily deep dives into the evolving world of cryptocurrency.